Welcome, dear traders. As usual, we start the day with a recap of the Asian session. Traders are still digesting the economic reports from the United States, Japan and Australia published yesterday. How did they impact market sentiment? Watch our video review and find out. On the Thursday, Wall Street extended its 5-day growth. Stock indexes jumped sharply amid upbeat earnings reports revealed by leading U.S. retailers such as Macy's and discount chains Dollar General and Dollar Tree. It seems that investors have got tired of the gloomy forecasts, saw the optimistic outlooks of the retail giants and the likelihood of less aggressive rate increases by the Fed revived market sentiment. Traders were not even scared away by the lower-than-expected year's GDP data. The report revealed that economic growth dwindled by minus 1.5% in the first quarter, logging the first decline since the second quarter of 2020. On Thursday's close, the Dow Jones gained 1.5% and the NASDAQ rose by almost 3%. In today's Asian session, the US stock index futures kept growing. Hence, the stock market is likely to log the best weekly performance since March. As we know, everything may change rather quickly. For instance, optimism may wane and investors will again start abandoning stocks. Apart from that, analysts believe that aggressive tightening is already slowing down the economy. It's still very early to talk about the resumption of the bullish trend on Wall Street. The current rally is likely to be short-lived, so a 4% rise just helped the market escape a steep decrease. Risk appetite also affected Forex. The US dollar has tumbled to monthly lows for the first time since April 25, heading for a second consecutive weekly decline. Save the inverse correlation with the stock market and the risk on sentiment, other negative factors are also dragging the US currency down. US Treasury yields are in the red. The euro approached its highest level since April 25. Rumors about a pause in a monetary policy tightening in September are also extremely bearish for the greenback. It lost its appeal with the traders as a safe haven asset. An increase in Asian stocks pushed the greenback lower today. At the time of preparing material for this video, the US dollar index, which measures the strength of the currency against 6 main rivals, fell to 101.69. However, analysts reckon that the US dollar has not peaked yet. For this reason, it may be fluctuating for some time between the support level of 101 and the resistance level of 105. On the intraday chart, the index was consolidating in the range of 101.43 and 101.75. As for the dollar-yen pair, analysts are sure it has reached its peak. However, in the medium term, its trajectory will depend on inflation data. Whereas in the United States, inflation expectations are declining. Japan can boast of a real drop in inflation. Right before the opening of trading floors in Tokyo, the consumer price index for May was unveiled. The indicator slightly fell 2.4% from 2.5. The core CPI index, excluding food and energy prices, also notched a small change, rising to 0.9% versus 0.8% on the annual basis. Japanese Prime Minister Fumio Kishida also said that the recent spike in the prices occurred because of a rise in energy prices worldwide. The central bank and the government of Japan still strive to achieve the 2% inflation target. As the Bank of Japan remains solid on a dovish stance and makes no drastic changes, the yen is taking advantage of it. Over the past 3 weeks, the dollar-yen pair has been gradually declining. It moved away from a 2-decade high of 131.35 to 127.03 in the Asian session. The yen also gained momentum amid the difference between Japanese and the US Treasury bond yields. However, risk appetite undermined the demand for the yen as a safe haven asset. A rise in stocks facilitated the growth of the dollar-yen pair. Yet, concerns about a slowdown in the global economy dampened the optimism of traders. As a result, the yen managed to assert strength versus the fallen US dollar. As seen on Friday's intraday chart, the yen kept rising against the US dollar, moving in the range of 126.65 and 127.21. Expectations of a pause in the Fed's tightening cycle are increasing, which is bearish for the US dollar. The Reserve Bank of Australia is, on the contrary, more hawkish now, which is beneficial for the Aussie. In addition, the Aussie as a commodity currency climbed higher amid rising oil prices. However, they have declined slightly today after hitting a 2-month high in the previous session. Yet, they are still hovering at high levels. Investors also took notice of reports about possible negotiations between the United States and Taiwan on deepening economic ties. The Australian dollar advanced amid such news as well as the risk on sentiment. The AUD USD pair lifted up by 0.5%, trading today near 0.7141. It's clearly seen on the chart that the Aussie is moving in the bullish channel of 0.7089 and 0.7153. Next week, the PMI manufacturing indexes for the Asia-Pacific region are on tap. The indicators are likely to decline due to the consequences of the Russia-Ukraine conflict, as well as production shutdowns in China. However, let's stay optimistic and trade with the gains. InstaForex TV team always supports investors in this endeavor by providing the latest market news. That's all for now. Don't miss our next video review. See you soon.